Well, welcome back to Zoom, everybody. We'll wait a few more minutes as people are joining. Alex, good to see you. Uh, Remind me, are you somebody that met through the investor networks? Or are you an Intel employee?
Intel employee.
Okay.
Uh,
Congratulations
yeah.
on still being there.
Yeah, we're still in survival mode.
Yep. I
What
recognize
about
a
you?
few others. Hello, Ein. Looks like you're out and about. We're just doing a club discussion today. Oh, and I did promise to record it, which is recording. Hello, Amy. Couple of usuals here. Happy Friday.
Happy Friday.
You still at Intel?
Yes, I am.
Good, good.
Yes, about, it's hard out here in these
I
corporate
have heard.
streets.
Yeah.
I can tell you I think it was Tuesday. I don't know. Whenever the article came out in the news, I have a friend. I met him when I was working at the banks and he was working with a consulting firm. Every time something is going on with Intel, he's like, "Hey, you okay?" I'm like, "I am just fine." He was like, "Have you seen the news?" I was like, "Yeah, yeah, I've seen it." And
It's not
so,
good when your banker, your financial advisor starts asking you how you're doing.
no, he's not a financial banker or anything. He's just a
Oh,
friend
okay.
of mine. And like I said, he was a business, he used to work for PwC. Actually, I haven't asked him has he found work yet. But anyway, no, my financial advisor hasn't called because she works with a lot of Intelers anyway. So
Hello, everybody. Hello to all those of you who are just now joining. I see a lot of regulars here. Anita, Prolette, Ed, uh, Vahid, a couple of others who just said hi. Hi, Keisha. So, as you guys all know, today is just a club discussion. So we can wait a few more minutes as people are joining, but we can also just start talking. Um, My agenda for today is to open up the discussion with just a review of where the club has been over the past, it's been 6.5 years now, that this club has been running. Is that right? 6.5? Yeah, 6.5 years. So, just, you know, any memories or any thoughts of things that you liked. And then I wanted to open up a discussion on what we're doing right and what we should change. How can we make this a better club for everybody here? And I'm also looking to reconstitute the leadership team, which is basically a volunteer team that helps me find speakers, send out emails, schedule meetings, um, suggest new topics. Basically, people potentially be the moderator. There's going to be a couple of weeks this summer where I'm not going to be able to be here in June. My family's heading out to a cousin's wedding and to Yellowstone, so it'd be great to get a moderator lined up for those weeks. So basically, it's an open floor today. Last but not least, any success stories that you're having, any questions that you have about the current market conditions, just anything you want to discuss with the club. There's other than how can we be a better club and your questions, there's really no agenda here. Anita, yeah. Yeah, we've been talking about having you come in as a speaker, a moderator. You want to join the leadership team? I promise it's low maintenance. It's just finding speakers and booking them basically, and then occasionally sending out some meeting invites.
Yes, I'd be more than happy to do that. I feel like I need to give back because you've given me so much. So I would be honored to help out with that.
Thank you.
Sounds
And
like
and you
fun.
know, I won't try to hide it here. Right now I'm kind of hitting a little burnout. And so I could really use some people in the leadership team as well. So it's not just me, but there's a whole group that's here, and if I have no plans on going anywhere, but if I ever did, I want this club to continue and to be a great club for everybody that's involved, even if I'm not here. So I want to make sure that there's a leadership team in place and everybody knows the logistics on how to run the club.
Cool. You should have been burned out long before now.
It's happened a couple of times and I've bounced back.
Yeah.
It comes and goes, just in cycles like anybody else. The trick is just to get them booked out far enough in advance that you can go through the burned out cycles, and I usually go back into either evaluating deals or programming and working on software. Those are my two kind of fallbacks.
Yeah. I'm just amazed that you have not run out of speakers.
Oh, there's so many out there.
That's the crazy part. When I first came, I was like, oh, okay, he doesn't, there's not a lot out there. Then it's like there's always something new. And I'm just amazed that we've only scratched the surface.
Mm-hmm. Well, and really the trick is finding high quality sources of speakers. Because you only want to bring really good people into a group like this. And so I'll usually have a 15-minute, get to know you call with them. And I've started doing on occasion like a podcast or a LinkedIn Live event where I meet an operator, we talk for 20 minutes, they tell me what they do, and it's fairly informal, and I just get to know them. And I try to do 2, 3, 4 of those a week maybe, and then one of those people potentially gets in to be a speaker.
Hey, I am open to learn.
All right. So let's open it up to the topic of 2 topics. What has this club done well, and where should we go from here as a club? Any changes or any thoughts about just how to run this club better? And then secondly, any questions that you guys have or success stories or do you just want to fill the club in on what you're currently investing in? Stories are always great for discussion and to get the wisdom of the crowd. So I'm going to open it up here.
Hey, Daniel, I have always wondered, like, when you bring on the speakers who kind of plot their investment opportunity, like, we have these luxury garages and whatnot. Mm-hmm. What's the uptake from our side? I mean, do you have any statistics? Like, are we investing in those opportunities?
Well, so in the case of the luxury garages, that was a speaker that I brought in and basically said to the club, hey, there's a platform here. You can hear from them. And if you want to invest with them, go contact them. I have nothing to do with it other than, giving them a forum to speak on because I knew they had a decent investment. For some of the club fund speakers, I need to get my processes down a little bit. And frankly, if with the leadership team in place, I'll probably put more marketing logistics in for the club fund. Because we will raise some capital for each of the people that come in, but I'd really like to scale it up. We're raising 150 or 200,000, which is like 3 or 4 people on a particular topic, and some speakers have had none because nobody seemed to want to invest with them, which is fine. If I thought they were good speakers and nobody else wanted to, or even if you just went and directly contacted them, I mean, I'd appreciate you going through the fund, the club fund, but are you okay? Nothing says you have to.
Walking? Okay. Yeah. All right. Thanks.
Yeah. So whenever we bring a speaker in that's part of the club fund, I always want to mention that. Talk more about the club fund. Sure. So the club fund is a way for this club here to get into higher quality deals at lower minimum investments. And basically the idea is we're going to bring in investments that are $100,000, $200,000 minimums and let them present in the club. And the club fund speakers are funds that I've pre-screened, and they're things that I would invest in. And then when they give their investment pitch, if 3 or 4 people, whatever it takes in order to reach the minimum, reaches out and wants to invest in them, those people put their money in the club fund, and the club, which has a minimum of 25K, and then the club fund turns around and invests in the speaker. So it's part of our core values of education for the club and providing paths of opportunity for people. So I see it as kind of just a service to the club to help people get into deals at lower price points. Right now, if you want to know, currently we've only invested with two sponsors in the club fund. One is DLP Capital. We're currently 53% invested in DLP Capital, and we are 39% invested with OCG Debt Validation Fund 2, and I believe that leaves 7% in cash and 30-day T-bills. So that's our current investment. And the strategy with DLP is DLP is a debt fund. And so they have, a lower rate of return. It's 8 to 9% rate of return annually, but they pay out monthly, so we get solid cash flow every single month. The club fund pays out on a monthly basis, and then the other thing with DLP Capital is that it has 90-day liquidity, which means that if we find another good opportunity like the OCG Debt Fund, we can liquidate part of our DLP and allocate it to the OCG Debt Fund. So as people put money into the club fund, we can put it immediately into DLP Capital, and then within 90 days, we can if we find another more worthwhile investment that has a higher return but locks up the money for a longer period of time, we can then move those over. So it provides the club minimum's 25K. I need to put together a much better presentation on it. That's one of the things I want to focus on here in the near future. And then the other part of it is just giving the club a voice. All the people that are in the club fund come and speak to the club. And so if the club is interested in them, we invest. And if you guys aren't, we don't. Hey, we're not on social media. We're not being live streamed, even though I probably should live stream to YouTube, but I didn't set that up. I'll upload it there. So if you guys want, you don't need to put your questions in the chat. You could just take yourselves off mute. I'm seeing quite a few questions here, though.
Yeah, you want to hear a success story?
Yeah.
Yeah, all right. So it's about myself. So and how the fund has helped me. So first of all, let me just put a video on. I'm here in the Boise Mountains mountain biking. It's a beautiful day and beautiful mountains. But back to the story. So I own a couple of real estate, investment homes here in Boise. And last year we bought a beach house in Manzanita, Oregon. And I had never heard of a germ cost segregation study. And I first heard it in this club. Didn't pay much attention, so it doesn't apply to me. And long and behold, in order to buy the investment property in Oregon, I had to sell some investments, and my passive income from there was about $200,000. So suddenly I was in a situation where I needed to offset that gain in order not to pay taxes on that. And so I did a cost segregation study. It came, almost up to the mark of 200K. The 60% that you can take off the first year of those depreciation costs, and basically offset that passive income on the cost segregation study. So, that's thanks to the club that I learned about this, and this really came in handy. And another thing maybe is that it's I'm a W-2 worker and my wife is a stay-at-home mom, also learning about the real estate business. And so in the last couple of years, we've been able to claim her for tax purposes as a real estate professional. And so she's taking care of all of these things. And so now suddenly all the losses and, write-offs that you get are actually, coming off from the active income. So I always when I explain it to people, it's like I'm discovering these new things in the US tax code that it really does favor real estate investors. And it's almost like unbelievable how beneficial it is.
Very
So that's
nice.
my
Well, how much did you say the cost segregation saved you? Or
Uh,
offset?
Yeah, it's an offset 200,000 offset.
Oop, I think we lost you, Ain.
Oh,
Or did we
am I
lose
still
me?
there?
Yeah, I think you're here.
Yeah. Okay. So I think it was around 200K.
Okay, very nice.
So that was and I paid, you know, of course, out of pocket, 2,600, I believe I paid to the guy or the company that did the segregation study.
Nice. 2,600, you get a 200K tax deduction. How much, do you mind if I ask what the down payment on the house was?
Well, on this house, since I bought it, the interest rates had already gone up, so I put down around 500K, my own money.
Okay. Okay.
And then I got a mortgage for the rest. And yeah. So
Very
it was
nice.
kind of, kind of. You shouldn't put that much money down on an investment property, but you know that's just the way it worked out this time. So.
Yep. All right. Anybody else want to share a success story? I see a couple of questions in here in the chat. AA wants to know, can I please share criteria for selecting a fund or a syndication? And I assume you mean in reference to the club fund.
No, Daniel, basically, you used to bring syndications also before you started the club fund. And I had a very bad experience, almost 100,000 to different funds. And, right now, I don't think we're going to get the money back. So presentation wise, data wise, when they presented, everything looks good, not through your club, but then eventually the money is gone. So just wanted to see, I'm really scared. I don't think I will ever invest in any syndication now, but just, if something sounds very good, maybe learning from you will be a good idea.
Well, so I will say that it's difficult because people will often give great presentations that seem very reasonable. And I think the larger distinguishing characteristic, and the one that I'm leaning toward in all the club funds, is that they have to be larger companies that are doing this. For instance, DLP Capital, the fund we're invested in there is a $2 billion fund. So I'm not terribly worried about that going under. But yeah, you're right. If it's a smaller group, a lot of sponsors know how to talk a good talk. And yes, can you hear me? Hello? Okay. A lot of sponsors do know how to talk a good talk. And so it really comes down to, the sponsor's track record and other people recommending them. And there was one person here who said, can you talk about bad experiences had with syndications? I think a lot of bad experiences are being had just across the industry right now. Interest rates have remained high for a long time, and a lot of groups have sent out capital calls. A lot of groups have. And so it's a time where it's difficult. A lot of real estate syndications are very difficult. I haven't invested in a multifamily property in over 2.5 years now, because I don't think multifamily is, at least favored in the industry. Now, industrial properties, other types of luxury garages, that's one of the reasons why we've also branched out into other types of investments like debt validation or airline industries or other types. But yeah, basically checking out the sponsors is becoming more important than checking out the deal even itself. Anybody have any thoughts on that?
Yeah, I think that if you've invested in the last, I guess, 22, 23, everyone is having like hard time. So I wouldn't be afraid if that's just your experience, because yes, a lot of the stories were the same. The interest rates went up and you're in trouble. Majority of who you would see is in trouble is because of interest rates, and it's hard to control that. Now, what you can, but I would say that one thing that you can consider doing with the whole, oh, I'm scared to invest in syndications, is try to go then more conservative. So instead of looking for those higher returns, look for the more stabilized properties, look for more of the things that they go and put less debt in place, or definitely going after the deals that are on fixed rates and have plans for insurance and taxation. So I think that the way to protect yourself one way is to go more on the conservative side and not go after the riskier projects. But yeah, I have experiences too.
Prolette, what's that in your background there? Syndication tracker?
Oh, that's my passion project.
You
I don't think
want to tell the group about it?
Sure. It's basically a tool to help you track your syndication performance. It's for passive investors. It's not for active investors. It has no deals and it's not going to help you with your like, oh, I want to find deals or anything like that. I feel very passionate about not allowing any sponsors into the platform. So it's just for you. It's basically your portfolio manager for syndications. But it will help you track, are they performing? Are they not performing? Are you getting the distributions you were supposed to, or do they just seem like they're delivering the distributions they were supposed to?
I was going onto your site to sign up. Does that mean I shouldn't bother?
Oh, no. Like more like you can put your investments in, but it's not you as a sponsor, you're not going to do anything. You cannot put your deal update. Yeah, it's not a marketplace.
Right. Tracks your LP positions.
Yeah, it's all about LP.
That's needed.
Yes. But go and try it. It's free. It's my passion project, not my money project. So I'm trying to actually make it free for as many people as possible. I haven't even figured out what my monetization strategy will be. But now I just want people to try it out and give me feedback and let me know what else should be in it. I built it for myself because I've been now in 25 deals and it was getting really hard to keep track of all of that.
Yeah, it does get hard. Were you doing it with a spreadsheet before?
Yeah, spreadsheets. But there are things that you cannot do in spreadsheets, like, oh, do my projections of what my distributions would be, right? I mean, you can kind of do it, but the tool will do it for you based on what projected cash flow is in each year. And it will do some of these estimations. It will go and validate like, oh, what is your projected IRR versus your target IRR? So some of these things that sometimes the sponsor tells you, oh, it's going to be a 20% IRR, and then you calculate it and it's actually more like 17. So where do they come up with these numbers? But yeah, so check it out, give feedback. But
can I share my screen with it?
Sure.
Or you? I'm just looking. I've never seen it before, so I'm just looking at it for the first time here, and it looks very nice.
Oh, that's the simulator. So the simulator is just there to show you what your portfolio can look like in the long term.
Yeah, I don't have any data here, obviously. I just signed up, so.
Okay. Do you want me to share my screen? I have a demo account.
Sure. And while you're doing that, I do want to get feedback from people in this group on what we can do to improve the club. I really want that to be quite a bit of the discussion today. And any other volunteers that want to help with the leadership team.
Yeah, since this is open to everyone today, no speaker. I like the Ains story when he opened up how he invested and how he bought the house and all those things. Those kind of experience from the club members will be helpful for the people like me, where we really want to invest and learn how people are making success stories.
Okay.
That will help really. Yeah.
Hey, welcome HS. Welcome to your first time here. This, you know what? You're absolutely right. I should go out and solicit more just testimonials or stories of what people are doing in the club. maybe even make that a regular part of the hour meeting that we have here.
Yeah, because not everyone has like 500,000, so they say
Right.
25,000 several times. Not everyone has that kind of money, right? So probably some people are in the beginning, they want to start, right?
Yeah.
So yeah, that will help.
That's great feedback.
Yeah.
And if anybody would like to volunteer, put it in the chat or email me. It's always great to hear people's stories.
I didn't have any extra stories, but I wanted to chime in on that because, I've been coming for a good while, I think over like 2 years, and I've tried to get my husband to invest because he holds the reins of the money, and he's so scared. He's over 20. He's like, I don't have 200,000, and I'm like, well, let's just liquidate 25. Let's just start with a small amount. But I don't have testimonials to tell him, hey, well, I have an ROI on that 25 that we will get a payment every month. You know what I mean?
Mm-hmm.
So that testimonial thing on these smaller investments, even though it's in our big fund, Danielle, because I love that you can invest with just a 25 and see a return on investment. I think that would be really helpful for the smaller investor who's just starting off.
Yeah.
And there are many of us who, we have these threats of our jobs at Intel, and now you're like, oh, I need a backup plan. But you don't want to give all of your money because you're like, I need a backup plan. You know what I mean?
Mm-hmm. Mm-hmm. Prolette, I know you're active in looking at deals right now. Are you seeing better deals coming into the market currently? I know that I'm seeing an uptick in better deals that are coming up, but we also have all the testimonials of the people over the last year or two that have been kind of burnt or are in a situation where it's not cash flowing.
Mm-hmm.
What are your thoughts there? Sorry, I got you while you're eating. I'm sorry.
I just got back from yoga and needed some food. I'm definitely seeing better deals. Actually, right now, I'm mostly looking at deals for just to stay on top of it and understand what's going on with the market. I think that in my presentation to the club, that's something I talked about, is that now that I'm passive investor only, unlike a lot of you that you have jobs likely, I do not have any more income that's coming in that I can reinvest. So for me, I am in a situation where I have to wait for projects to go full cycle in order for me to reinvest because I don't have income. So I'm from time to time actually jealous, especially I think that I'll be very jealous this year that people still get that W-2 money because I do see more better deals coming through. There is speculation also that there will be some more foreclosures. A lot more of the loans are coming due as well. So the interest rates will be raising on a lot more properties. That said, I think, Daniel, you mentioned that you haven't invested in multifamily in a long time. I haven't, and I wouldn't either. I think that for me now, some of the other assets are a little bit safer and a little bit, I would almost say I think, Keisha, you were just talking investor friendly. Even something like what Daniel mentioned, the DLP fund, which is, I don't really like debt funds because it's I usually like investing in equity, but it's something to show that this thing works, right? And getting some kind of an ongoing income so you can prove that, hey, investing in something like this works, investing in real estate works, or investing in syndication works. I think the biggest hurdle for the new people is that part of well, but does it work? Because it's new and you're signing all these scary documents, right? It's when you read the PPM, it's like the world will end and you're going to lose your money guaranteed.
Right.
But it's always scary until you actually try it out. And I always tell people, try it out with smaller amounts and try it out, spread out between different sponsors, different deals, diversify. Because you're more likely to get a success, and you also probably want to invest in something that will give you that cash flow to make you feel better. I wouldn't, as a new investor, I would not invest in a development deal. Development deals, they do not get any cash flow until basically the deal is done. I think new investors should basically wet their feet with something simple and just go and try it out. Start getting some money so you boost your confidence and then move into okay, now we're gonna go for more adventurous things.
Hey, Perlette, I'm a software developer, and I'm really curious. What are you using in order to write your site?
So I'm using WeWeb for front end.
WeWeb.
Something you should try. Yes, it's great. It's
I've
a
never heard of
very
this.
Can you
it's a
type the
very
name VWeb? Sorry.
yeah.
Okay.
It's a very nice medium.
WeWeb.io?
Yes. If you
Got it.
have some development experience, actually it's nice because it gives you some ability to do more custom stuff with JavaScript and gives you a little bit more, it's closer to what you would do with development, but you don't have to worry with dealing with stupid stuff like style sheets and like, oh, layout. It's a little bit more of a drag and drop kind of editor with more backend
Gives you some good backend options here. GraphQL,
So
different databases. Anyway,
I'm using
not everyone here is a software developer, so I won't geek out.
Yeah, I'm using Xano for backend. I know that a lot of people use Supabase with
the club website runs on Supabase.
Yeah, well, Xano is a lot more expensive, but they have a lot, their API capabilities are much better. Like you can go and basically drag and drop, create APIs, not just tables. So that's what Xano has. So that's what I'm using.
All right. Any other suggestions from people? I loved the suggestion about testimonials. We got to bring more of those in. Anything else?
I had a suggestion.
Yeah.
I feel that some of the deals are interesting, but more it will be interesting to see like more of a deeper dive on kind of evaluating certain asset types. So multifamily, I think there is a lot of content around, but other things like actually, I would almost call it like top level underwriting, for basically underwriting for passive investors or something like that would be great for different asset classes.
Okay.
So that's my contribution.
So more deep dives on the fundamentals of underwriting. Hey, if you like that idea, put a 1 in the chat. Start doing that. Just so we can gauge it.
Underwriting more for passive investors, because some people go full on the details, and I think that for passive investors there is like a really nice high level things that you can think of that will help you actually get like, does this deal seem like bullshit or not?
Yep, absolutely. All right. Hey, there's everybody. 11111. Alex says there are AI tools are there AI tools people are leveraging for searching for investing? I heard that tools can help you search and pull county court records and certain criteria. I may have some news around that in a month or so. I'm actually currently working with a partner. We started a company called PropTech Integrations, and I'm currently working on a tool that combines together AI and a lot of public as well as Esri APIs in order to create documents. We're actually initially targeting brokers, but I also am targeting using it for passive investors because I want to use it for our club fund. But I've shown a number of demos to different groups, and I've gotten some feedback, and so we're kind of going through a refining of what the product is right now. I was admiring yours, Perlette. Yours looks very polished and nice.
Will your website or whatever you're working on give me the information? Say, give me the list of people in my community those own the house for 20 plus years.
It will give you information that Esri has access to. I'm not sure if Esri has that, but it has information, demographic information like area median income, household income, income based on different years, businesses in the area, that sort of thing. So you're talking about looking into personal records there, and I'm not sure that that's part of at least the initial APIs we're using.
Okay.
I did get access to a whole bunch of government agencies, though. Data.gov is a fountainhead of interesting information. So you can pull from the FRED API, from the Fed API, from the Bureau of Labor Statistics, the Bureau of Economic Analysis, all sorts of interesting types of information you can layer onto your reports.
Yeah,
You know,
basically, yeah, go ahead, sorry.
Oh, I was gonna say, mentioning Fred, I was actually trying to look at how can you easily get data from Fred, and if there was any AI tools to do that. Just so everyone knows, I had found like a GPT in the ChatGPT store that somebody had created something that tries to get data from Fred. It kind of worked. If you're curious on being able to query the Fred through an AI, I thought that was interesting.
Yeah, Fred's got pretty nicely laid out APIs. I'm looking at them here, where you can basically, pull from different categories or series here. And then, if you want to create an API, an AI tool that can actually pull on these, all the AI vendors right now, whether you're talking about OpenAI or Google or Grok or Claude or Perplexity, they're all introducing tools. They used to be called functions or function naming, function calling, but now they're called tools. And the basic idea is that you can define a series of tools, and those tools could be just calls to these APIs. And then the AI, OpenAI or whatever it is, ChatGPT, will decide which tool to call in response to what you put into it. So you can say something like, get all the economic data in this category and arrange it in a table for me. Fred, though, if you've never gone here, you don't have to access things through APIs. They have, really good charts that you can go to and look at as well. You just click on unemployment rate and you can pull it up, and then you can come edit the graph, and you can add on, other trend lines. You can add frequencies, monthly, quarterly. You can really customize these to make them look for exactly what you need. A lot of investors use these in their presentations. You can always tell when it's a Fred chart.
Daniel, I have a question. It might be more of a survey.
Yeah.
In this group, I just want to understand, and this might help us out going forward for putting stuff on, but the level of experience for the group. I would love if we did a 1, 2, 3.
Let's
if one would be a beginner, you haven't bought anything and you're just trying to understand how to get started. A 2 would be more, maybe you bought a single family house, or maybe you invested in a syndication, either or. That would be somebody who has medium experience. And then advanced would be a 3, where you are a regular investor of real estate and you have participated in numerous syndications. So can we do something maybe ask that question?
Yeah, I think you just did. Go ahead and do it, people.
Okay, yeah. Okay, so 1, 1.
Oh my goodness, there's a lot of ones here. I can start retelling my old stories.
There are a lot of 1s, there's a lot of 2s. Okay, so that really gives me a really good understanding.
Okay, great.
It helps. Okay, so I think that really helps gear the conversations, because
it does.
For me, the person who asks how do you get started, that's huge. And for somebody who's done it so often, you kind of take for granted, okay, well, what about funding? What's it? You're scared in the beginning because you think, oh, I'm gonna lose some money, and you think about the risks. But now having done, anything from hotels to student housing, senior living, storage, multifamily, I can honestly say that some of them are better than others. And I think it's a risk not doing it, because as you guys have seen, the stock market, it has been scary. And people say, oh, you don't want to invest in, real estate or alternates. But if you don't, you put it in stocks and you see what happens. So I think the biggest thing and the biggest argument is you got to diversify, but you got to diversify correctly. So I think a lot of you guys probably started off by buying maybe a single family home because that gives you a breadth of experience just going through that process and managing it and maybe getting tenants. I think that's, for me, that's how I started. I don't know about the rest of you guys, Dan, or you, Daniel, like your first introduction to doing it.
Yeah, I mean, this is a great topic to go all around with people here. But for me, my very first, and this is where I became so interested in real estate was, honestly, things in our childhood affect us. When my grandparents passed away, when my grandmother passed away earlier, my grandfather passed away when I was six, maybe 14, I think. Yeah, so I was a teenager, younger teenager, and yeah, I was 14. So anyway, he had been a tractor repair mechanic with International Harvester for his entire career, and he decided to finally retire. And my grandma, who was born from the Great Depression, the family used to say she could pinch a penny so hard it would scream. And she would never buy anything at the store unless she had a store coupon and a newspaper coupon. But she was the financial wizard between the two of them. And she came to him and said, "Hey, why don't we partner with your brother and buy this apartment complex in Aurora, Illinois?" They lived in Park Ridge, Illinois, so all in the Chicagoland area. And so they partnered together. Once my grandfather retired, he and my grandma partnered with his brother and bought an apartment complex, and they fixed it up in their twilight years. And when I was, 14, and even before that, I heard stories of the apartment complex, and it was a good size apartment complex. It was a C class, which I didn't even know what that was at the time. It was 120, I think 122 units in Aurora, Illinois. And my grandpa just fixed up the units by himself and then rented them out. And that's how he provided for his retirement. And the thing that struck me once they passed away was my parents couldn't pay the property taxes on it. So it was being handed down. The federal government took about 60% of the value, and my parents couldn't pay that out of pocket. And so they had to sell the apartment complex and start dealing with a whole bunch of lawyers. And I was younger and I was interested. And so I listened in on all these conversations. And it really struck me one day that my grandpa worked at International Harvester his entire life and made a decent living there. But it was only after he retired and bought some real estate that he had anything that could be handed down to my parents. And in retrospect, it should have been put in a trust, and it could have avoided a lot of taxes that way. So even after he retired, he then bought real estate and fixed it up, and that's what actually provided the legacy for the rest of the family. And so that was my first experience with it, and kind of how I got the real estate bug. My mother also, these were her parents that bought the apartment complex. She had the real estate bug too, so I got a lot of it from my mother.
Wow, that's pretty powerful. Okay, so let me ask another question. Some of you guys, besides Daniel, put 3s in the chat. Are you guys willing to come off mute and talk about how you got started? I'm not going to call you guys out, but I think I saw 1 or 2 3s.
I think it's just Prulette and me. Oh, and Alex.
I think my story is on recording somewhere from the club from a year and a half ago.
Okay.
But yeah, for me, I started with single family mainly because it made sense to me. But then I realized that the scale with single family is really, really hard to accomplish. I was in tech, I was working a lot. And after I bought 2 single family homes, I calculated that I'll need to have like 50 to 100 in order to basically stop working. And I just tried to find something different. This was back when there was no information about syndications or anything like that. And yeah, that if you send the link, people can listen to it. But for me, syndications made sense. And I was working, I was making money, so it was great. My biggest regret, I guess, is that I didn't know about 506B type investments when I first started, because I would have started much earlier. I waited until I was an accredited investor before I can invest in syndications. If I had started earlier, I would have probably retired earlier than 3 years ago.
Wow, that's deep. How about Alex? You want to talk about your journey?
Yeah. You guys hear me?
Yeah.
Oh, great. Yeah, I think really in a nutshell, in order for somebody to start, people are always like analyzing, especially when we're in tech, right? We're always looking at the numbers. We're trying to be risk averse. We're always super analyzing the information, and we over engineer something or over analyze things, and it's good to an extent, but it's really about getting started somewhere. I think the main lesson that I've learned is there's no really good time. It's really time in the market. If you want to be able to be able to see the fruits of an investment. Of course, getting into an investment during a time period where people are running away, sometimes those are the good opportunities. But at least my experience has been that because I've been doing this for about the last 10 years, actually a lot longer, but I've also had my failures as well. I've been hit through the recession and did some short sales, and after that we were able to recover by making the numbers work. If it doesn't pencil out, obviously it's not a good thing to get involved with investments. But my experience has been mostly in the residential space, doing rehabs, flips, mostly long-term. I've built ADUs or casitas if you're in Arizona. But really, my experience has been that once you buy the first one and you see all of the advantages that it has, I think cash flow is really the number one thing for me first. If you're not able to cash flow and you're basing your investment off other factors like appreciation or maybe it's a tax play and so forth, those are great. But for me, the key is cash flowing, and if you're able to keep that investment and write it out for a good period of time, you'd be able to write out the good and bad turns in a market. You start with the first one, and you see the appreciation take place, and you grab from the equity from there. You invest it into a second property. You see the appreciation on that second property, and then you start to really learn to leverage debt, and multiply from there. So I've had more properties, but at this moment in time, some of them I've sold off and invested in other opportunities as well, actually outside the country. But for the most part, I would say it's not about timing the market, but time in the market is
Agreed. So your first one was a flip?
No, the first one was long term. It was actually I lived in it, so I was able to take advantage of getting a primary rate. I lived in it for about 1.5 years. This was before I got married, so this is something that if you're single, take advantage of the opportunity to be able to get into a property, live in it, then have somebody else pay for that and be able to save enough for the next property. In my situation, I was able to pull equity from the first and reinvest it into a second property and kind of turn into a domino effect. I ended up with a lot more properties, but after a while, you end up seeing that some states are not very landlord friendly, so you decide to sell and reinvest in other places where there's more opportunity. Currently, I have properties in Texas, Arizona, and California.
Okay, so another question. So I love that because I did that too. The first one, you know, you live in, and then the next one, when you live in it, you're like trying to buy another one, but you want to get a primary rate, you know, not an investor rate. So you basically say you're going to live in it. And for me, I basically said I was going to live in my second one. So they're like, oh yeah, we'll give you preferred rate, even though I didn't move into it. That worked for two of them. So how many of them were you able to get with a, you know, a lower rate because you said you were going to live in them?
I did the first 3 properties that way. Then after that, I eventually got married, and that's harder to do once you start a family. After that, it was just making the numbers work with investment rates, or you go the DSCR loan rate types as well. So those are where you don't necessarily have to show your taxes. You have to show the performance of the investment property and how much rent you'll be able to get out of that property. Those are normally higher rates, but if you're able to make the math work, then you would proceed. But I think with interest rates climbing, over the last years, interest rates have exponentially grown. It makes it a lot harder for investments to pencil out. So that's why I'm also have been in this club to see what other opportunities there are to take advantage of investment properties outside of residential. I like to see if, Daniel, if you had visibility or into what other club members do and how their successes are with investments and with speakers that you have had in the past. That would be good to see. I don't know if there's also just like
well,
like it would be good to see what others are doing and
we could definitely invite people to share, but actually as a general rule, I disclaim this is basically a platform, and then you're contacting the sellers for the most part directly. So in those cases, I don't necessarily hear, what the result was.
Unless they provide that info.
Yeah, I mean, we could start a discussion forum and put it up on the website. I've tried that a couple of times before, and it's never gotten a huge amount of traction. So, I mean, if you guys would like me to do that, go ahead and put a 1 in the chat. If there's people that want that to happen, I can certainly put one up. I just don't want to put one up and then have it underutilized.
I just think it adds more work for you if people are not going to use it.
Yeah. Well, and we had a Discord server at one point.
Yeah, I was going to say something more like a chat group seems a little bit easier than forums, because forums require a whole topic and then you get committed to it, versus if people have questions and they can go and ask.
Yeah.
I didn't know if there was a Discord.
Yeah, we put it up for a little while. Let's see if I can find it again here. And then, I basically, if something like that happens, I probably should just mention it once every single club meeting just to let people know it's there.
You know what I would love? I would love, so you've had a lot of people come in.
Love what?
You've had a lot of people come in to speak, and every blue moon I'll go check them out. I'll go vet them. But sometimes I don't come back and say, hey, this is the results of my vetting. Like, I think there was one group that came in and they were building I want to say a Ritz-Carlton on an island.
Yeah. Yeah.
So I was like so excited. So I went and I called the person and they sent the information. And I actually read through the information and they talked about this person who's like the manager of the Ritz-Carlton. And so then I Googled her and I realized, hey, she's been gone from this project for like 4 years. So when I went back and talked to the people, I was like, hey, is this person still there? They're like, yeah. And then I said, oh, okay, because she works for a totally different company. And they said, oh, I didn't realize that. And so I told them.
Which person were you looking at? Because I think the broker introduced that particular one.
It was the broker, but the information that they were sending out wasn't. It was old, and they didn't check. You know, I'm a stickler for details, and they didn't check that. So that was probably, and I don't know if it was good or bad, but that gave me a reason to pause because I've done hotels before, so I know what to like look for in a hotel deal. But I think sometimes when we go out and we do talk to people who do come in and they have good experiences or bad experiences, it might be good to share that with the group, you know?
Yeah. What would be the best way of doing that? I mean, if we got people that came in and shared good experiences and shared, the Discord channel, I guess I could just start talking about the Discord channel more. It's probably a good way to share those types of stories. Yeah. And then, if somebody shares like a really good one or a really bad one or one that has a happy ending or a cautionary tale, we could invite them in just to talk, the club here.
Yeah. And I'm pretty sure there was another one. Was it one that like they had to fire a lawyer or something like that? I don't quite remember that one, but they had to get rid of one of their partners.
Well, and one of the infamous ones is Ang Tang now. Not to call somebody out by name, but he fled to China. So that didn't work out afterwards.
Yeah, so we should probably keep a list of the ones like, don't date this one.
Yeah. But there are lots of good people that have been in here. So that's the other thing too. There are good stories and bad stories, and I don't want to dwell overly on either one of them necessarily, because there's a lot of everything, and you have to go get to know them and get their track record and understand what they're doing.
Yes, totally agree.
And I do want to make very clear that while I try to bring the high quality people in here, I'm not a financial advisor. I'm just an investor like everybody else. And so, I'm not giving tax advice or financial advice or legal advice or anything like that. I'm not licensed in any of those things. It's just a club for investors by investors.
Yeah. You're a connector. You connect us with people. One that I have not necessarily seen, and I would love to hear about is, like sometimes people will have homes and they'll turn them into some type of a group home. And I would love to hear about that. Because
when you say group home, are you thinking senior living or more like actually one area that we haven't had in that is doing quite well in terms of cash flowing is rehabilitation homes.
Yes, that's exactly
people that have have difficulties with drugs and alcohol, and they're in there for maybe 2 or 3 months, but they're paying they're paying rent, or the government is paying it for them. Those actually cash flow fairly well. I have a place just like down the block from me on the same street as me that it's a beautiful looking place, and it was just built, and it was built with, and it looks like a single family home from the outside, but it was built with 11 bedrooms.
Yeah.
And I assume that's what they're using it for, but I don't know.
It would be that, or even like juvenile home.
What'd you say? Oh, Prolette? Yeah, it could be a juvenile home. Oh, you're on mute. You're on mute, Prolette.
Oh, really? No, I'm not on mute.
Oh, there you are.
Oh.
I can hear you.
Virtual tours of projects will be
Oh,
super interesting.
oh, boy, logistically.
Since you said you were just
You know
down
what?
the
You know what? I could just ask the sponsors if they want to bring us around on a virtual tour. Yeah, I like that idea. I'll try that. I will send, for all of you that are looking for the Discord link, I will put it in our next weekly email that goes out. Just because it's been long enough that I tried to log in and I can't remember exactly what the account was that I used to log in. So I'll put it in the next email that goes out. And if you're not getting our weekly newsletter, which I assume all of you are, because that's how 99% of people find us, just go to alternativeinvestingclub.com and put your email address in that top, form. And if you have an Intel email address that you're receiving it at, put a personal one there, because on occasion Intel's network blocks it, or there's DNS problems. I don't know what exactly is going on, but some people have trouble inside Intel, and I have to figure that one day Intel may just decide to ban it because I send so much email to that domain. All right, we're coming up on the hour here. Any last minute thoughts? Ways to improve the club? And of course, if you would like to be part of our volunteer leadership team, let me know. Let me put my email in the chat here. There it is. Feel free to send any comments that way. And if anybody has speakers, I have not yet lined up. I have a speaker lined up for next week, but after that, it's actually wide open. So I need to line up a bunch of new speakers. Hey, thanks, Ryan. Ryan put the Discord link in the chat. All right, everybody. Have a wonderful day and a wonderful weekend.
Thanks, Daniel. You too.
Oh, we're going to be on Zoom from now on, too. I'm stopping StreamYard. It's too nice being able to actually talk to people.
Bye.
Bye-bye.
Thanks, Daniel. Sounds good.